If you're renting your house out just because you don't want to give up a 2% interest rate, you need to be prepared to lose money. More people than ever are choosing to rent out their homes instead of selling them, and I get it. You don't want to give up that low rate. Maybe the home's been in your family for years. With all this equity, the value is just going to keep going up and up and up, right? For most homeowners, being a landlord, it sounds way better than it actually is. And I know what you're thinking. Of course, a real estate agent, what's he going to do? Tell me to sell. But here's the thing. I actually work with professional landlords and sell tenant-occupied properties all the time. I know what this looks like for landlords because of the business I do. And what I've learned is that most people go into this with wishful thinking instead of a real plan. What better place to start than one of the biggest myths about being a landlord? Most homeowners assume renting out their house is easy. After all, it's called passive income. Find a renter and collect monthly checks, right? In reality, it is a full-time plus business. There's plenty of risk, liability, taxes, and opportunity cost. Here's the tricky part. Right now, you're not evaluating renting out your home like an investor. You're evaluating like a homeowner who's emotionally attached to the property. That emotional attachment matters, and we'll come back to that. But first, let's talk about the practical risks. The number one risk that most new landlords underestimate, well, 80% of landlord stress comes from one thing: tenant screening. A single bad tenant can wipe out years of appreciation, destroy the property, or lock into months of unpaid rent, especially under California's landlord-tenant laws. This is where accidental landlords get hurt. They underestimate how strict screening needs to be, or many times they're rushing because the mortgage is due and they want to have the money to make that payment. So this is where experience matters. Not all rentals are equal, and not all tenants are either. Here's a cautionary tale. I got a phone call from a woman who inherited a property from her mom. She wasn't sure she even wanted to be a landlord, but said, hey, I'm going to try it out. An applicant texted her asking if she'd take a Section 8 renter. Simple question. She said no. Then she changed her mind a day later and texted back to say yes. But it was too late. Days later, she received a letter from an attorney stating that she'd unlawfully discriminated by denying Section 8 and was being sued. She's still working through that lawsuit, and it's going to cost her tens of thousands of dollars to settle. One text message, one mistake, that's all it takes when you don't know the laws. And yes, even with perfect screening, things can go wrong. Then there's the property management. So let's assume you do find a tenant. Self-managing sounds smart and cheaper than paying someone until you realize you're answering texts at midnight, you're coordinating repairs, dealing with complex contracts, if you can find them, and disclosures, and trying to keep up with ever-changing laws. The laws have changed related to security deposits, screening tenants, providing fridges and stoves, emotional support animals, the list goes on, and I release content on this channel about that. If you can find a good one, property managers can help lighten the load, but it usually costs 8 to 10% of rent for a small landlord like you, which of course eats into your cash flow. And don't forget, if your property manager makes a mistake, you are still on the hook for the liability as the landlord. Oh, and speaking of liability, here's a huge one most people miss. Homeowners insurance, the policy you have on your house now, does not cover rental activity. You need to switch to landlord insurance, and claims get denied all the time when people don't know or forget to switch. If something goes wrong and a claim is denied, that's not a small mistake. That can be a 6-figure mistake. You may also want to take out an umbrella policy for worst case scenarios. And of course, insurance for rental properties is typically more expensive than your current homeowner policy. And speaking of costs, they add up for landlords. Let's discuss the brutal math. We're going to first talk about a number that almost no accidental landlords calculate, and even some professional landlords forget to do it too. And that is return on equity. Here's what I mean. The first important number is the estimated rent for the property. How much can you realistically get for rent for the property? It is very easy to overestimate, but you'll want to be cautious in estimating this number. Too high and the property will sit, and ultimately you'll take less money and the property's sitting there and you're not covering your costs. Next, we're going to calculate your cash flow, and that's how much money is left over monthly after you pay all your expenses. Don't forget any. This is HOA dues, property taxes, which may or may not be due every month. You may have to save it up. Gardener, pest control, maintenance, insurance, property manager, And let's not forget your 2% mortgage payment. So if any money is left over, you have what is known as positive cash flow. Now, I've worked with accidental landlords who are actually dumping money into the property every month because the rent isn't enough. That's known as negative cash flow. It's very easy to get there. The next important number is how much equity does your home have? How much did the value increase during these crazy years? Now, to get the return on equity, you divide the annual cash flow by your equity. We'll give you a quick example. Let's say you have positive cash flow of $1,000 a month, which is pretty good, and your house has $500,000 in equity, which is pretty good. Take $12,000 a year and divide that into $500,000 in equity. That is a whopping 2.4% return. You wouldn't turn down the stock market's average of 10% return to settle for 2.4%, would you? So why trap it in a rental property doing the same thing? You could put that money in treasury bonds and get a better return. That is not investing. That's like driving a Bugatti to deliver pizzas. And of course, this return is even lower if we look at the full value of your home. If your home is worth $1 million, then that return is a paltry 1.2%. And this is exactly why I run rent versus sell analysis for homeowners. Most people never calculate return on equity. And once they do, the decision becomes a whole lot clearer. Don't like math? If you want me to run those numbers on your home, just send me the address. I'll tell you exactly what the math says. Return on equity is why most high equity homes make terrible rentals, even if they cash flow on paper. Oh, and P.S., don't forget to plan for big capital expenditures like a new water heater or roof. We typically recommend setting aside money each month called reserves, and that also eats into your cash flow. Now let's talk about the part that no spreadsheet captures. You have filled this home with memories. You may have raised your kids in this house, maybe marked the door trim with their height as they grew up. You care deeply about how your home is treated, and you've taken great care of it. And renting means giving up that control. Tenants will live differently in the home than you did. They won't love the house the same way. And that can be emotionally brutal for some owners. I've seen happy people become miserable landlords simply because they couldn't emotionally detach from the property and how it's treated. It doesn't make you wrong, it just makes you human. And it's also human to forget the income tax implications. Here's where people get burned. If you rent your home for too long, you can lose the $250,000 if you're single, $500,000 if you're married, primary residence capital gains exclusion, also known as Section 121. Specifically, you lose this benefit if you rent it out for more than 3 of the last 5 years. Now you're getting into the world of 1031 exchanges to avoid paying capital gains tax. Not to mention there's going to be depreciation recapture, and suddenly renting for just a few years can cost you 6 figures in taxes. This is why understanding the income tax implications matter more than most people realize. There may be some tax advantages, but you need to have a deep heart-to-heart with your tax advisor before moving forward with renting out your home. Now, it isn't all doom and gloom. There are some cases where it does make sense to rent your home out. If you're going to plan on moving back into the home within a short window of time, even a couple years, this could be a good reason to do it, but you do need to make sure in the local area that you're able to do that. Some areas have eliminated the ability for landlords to easily move back into their home. I know it sounds crazy, but it's true. Maybe you're already a landlord who operates rentals like a business. I'm doing this for a client right now. They already have a triplex and other rentals, so they can rent their home out. They've got the systems and they self-manage and they know how to do it. So it makes sense, maybe, for them to do it, although they still get a lousy return. And I ran through the return on equity numbers for him, and he agreed it was a lousy return. Another good reason to become a landlord of your home is that that's part of your life plan. You've studied the laws, assembled the team, you got a CPA, attorney, property manager, real estate agent. You're going to treat this as a real business, not a side hustle. And this is going to be one of your first properties, then dive in. If you have that passion, this would be the perfect property to start with. But the key is having a sound plan for the whole thing, not just wishful thinking. If you're debating whether to rent out your home or sell, I'll run the actual numbers for you, real cash flow, return on equity, and give you the red flags for your property that you might miss. Just message me the address and I'll send you a rent versus sell analysis so you can make the smartest decision financially and emotionally. So now that you understand the risks of becoming an accidental landlord, the next question is, what do even professional landlords get wrong? In this next video, I break down 22 traps that professional landlords still fall into. And if you do decide to rent your house out, you absolutely don't want to miss this.